For everyone hoping for a real estate market crash, this is not the video for you. I don't have good news for you. This market continues to get more expensive and seems to be pretty resilient. So why is this happening? We have mortgage rates increasing, but prices are also increasing, and everyone is anticipating that something's got to give. Yet we continue to see price appreciation. So today we're going to talk about why that's happening. We also have one group of buyers that are just not interested in jumping in. They're holding their ground right now. So we're going to talk about that in a little bit. Let's get into it. This latest report from Redfin, home buying demand holds up even as an election uncertainty, stronger than expected economy push up rates. So you have heard it here. You have heard it on other channels, I'm sure, and from your friends and family. But we're waiting until after the election. That's what a lot of people are saying. However, this market is still moving along. Pending home sales rose 3.5% year over year during the 4 weeks ending October 20th, the biggest increase in 3 years, except for the prior 4 weeks when it was 3.7%. They're saying on a local level, pending sales are up 35 of the 50 most populous U.S. metros, the most in 3 years. Demand is also holding up at earlier stages in the home buying process. Redfin has their home buying demand index measure, and they're seeing that it's at its highest level since May. It's up 3% year over year. So why is this happening? They're even talking about how mortgage rates, the weekly average is 6.44%, up from a 2-year low of 6.08% at the end of September, and the daily average is 6.92%. And I'm going to show you guys where rates are as of last week, the end of last week, because that chart is looking pretty ugly. We lost a lot of ground in the mortgage rate world. So this market continues to grow. With all of this happening, even though we're seeing more inventory on the market, we're seeing the lowest number of home sales that we've seen since 1995, but prices continue to go up. How? Why? Housing inventory fell last week. Have sellers called it quits? This is the latest article from Housing Wire. Maybe not the latest, but this is from last week, so it's pretty recent. And Housing Wire has a lot of great information. Logan Mohtashami is amazing at analyzing the market. And I thought this was interesting, wanted to share because he's talking about how most sellers are also buyers. So we have to take into consideration that when we're seeing more listings on the market, we're also likely seeing an increase in buyer demand or more buyers out there because they are going to buy as well, whether they are selling to relocate or selling to move up or downsize or, whatever it is. Most of the time they're going to buy another home as well. So he's saying since mid-2022, when rates headed higher, 2 factors have been apparent. New listings data has been trending at the lowest levels ever recorded in history, and inventory has been able to grow from a record low levels thanks to mortgage rates staying elevated. We've seen some growth in new listings this year compared to 2023 levels. However, with the recent spike in rates, it's possible some sellers are just going to call it quits. The new listings data, this is what he's sharing of what has been going on. And this is nationally, not Phoenix specifically, but we will look at what's going on with inventory in Phoenix because we've been tracking that week over week. And if you're new here, we've been seeing that inventory every single week has been increasing. So here is the new listings for the last week over the past several years. In 2024, so this year, 60,000 new listings came to market. 2023, 56,600. 2022, 56,500. So you can see we are definitely seeing more new listings come to market this time of year than we've had in the last couple of years. And most people are saying, the more inventory we're going to have, prices will start to come down because the demand just isn't there. But we're not seeing prices go down. And he has another article that I'm going to share here in a minute, which is really, really good at explaining what's going on. So this is showing the national single family new listings. You can see where we were at in 2022, 2023 as we ended the year. And then this time in those past few years as compared to where we're at today. So just slightly higher in terms of our housing inventory. One thing that I think is so interesting and honestly like mind-blowing to really think about, he talks about where we were at with an all-time low housing inventory in 2022, which is just mind-blowing. So he says that weekly inventory fell from 739 to 737. This is this year, 739,000 to 737,000. The same week last year, inventory rose from 554,000 to 562,000. So we actually saw an increase in inventory this week last year. The all-time inventory bottom was in 2022 at 240,497. I want you to really think about that for a second. How many people do we have in the United States? How many housing units should there be? Way more than 240,000 on the market. Are you kidding me? No wonder we had the problems that we had with the housing market in 2022 when there was only 240,000 homes for sale in the entire US. That's insane. I knew it was low, but to actually see that number, it is just like totally mind blowing. I don't know. What is it? 330 million people in the US, something like that. 240,000 homes on the market. Okay. Moving on, it's hard to wrap your mind around. The yearly inventory peak for 2024 so far is 739,000. So yeah, we're way up from that low of 240, but we're not that much higher. And it says, for some context, active listings for this week in 2015 were at 1.1 million, 1.16 million. So 2015, considering that a balanced market, a much more normal environment, 1.1 million listings, and we're at 739,000. So this is where I'm getting at with this, with what we're talking about with why are home prices still going up, because our inventory hasn't really gone up to a point where we should be concerned, and we don't have distressed sellers. And that's what Logan Mohtashami talks about in this other article I'm going to share in a moment. Let's look at the active listing counts in the Phoenix area. So we've been going up week over week, but you can see here, this is not quite as much of an increase from last week to this week as it has been. We're at 19,477 and last week 19,309. And you can just see that line. It hasn't plateaued, but it wasn't such a steep increase. So the question being, is this inventory going to continue to increase, or are we getting to a point where maybe we'll see a plateau as we get into the holidays? We shall see. This article from Redfin, U.S. home prices grew 0.5% in September, the fastest pace since April. Again, we just continue to see home prices increasing. On a year-over-year basis, home prices rose 6%, the smallest annual increase since December. 13 of the 50 most populous U.S. metros recorded a drop in home prices month over month. So that is happening in some markets, but largely across the U.S., we're seeing this home price increase. And here, Redfin is saying there's around 20% fewer homes on the market today than there were 5 years ago, mainly because so many homeowners are locked into their low mortgage rates, with rates back over 6.5% this month and unlikely to drop below 6% this year. Home prices will likely continue their consistent climb until more inventory comes to the market in the spring. So Redfin is saying that we're going to continue to see home price increases. Now, I wanted to take a look at what's going on with the median sale price here in the Phoenix area as we are talking about home price increases. Now, this is the monthly median, so know that there is a lot of fluctuation here, but as I'm talking about, they were saying month over month increases, I wanted to look at it from a monthly standpoint as well. So we did see a change from, this was June to July, the median sales price, and then since then it's increased a little bit. We're actually a little bit lower than where we peaked back in April and May, which isn't surprising because those are our busiest times of the year anyway. And then the summer was super slow and we just had kind of a leveled off buyer demand with not a lot of activity. You know, the buyer demand, especially when you're in an environment where there isn't a surplus of inventory, that buyer demand is what's really going to determine where those home prices are heading. Now, you'll see between August and September, we saw an increase in the median sales price. Have yet to see where October is going to land on this chart. But, you know, I will say, we're seeing a little bit of an increase here if we're looking, you know, month to month over the last month. Not a trend yet, but we are higher than where we started the year. So we're at 442 for the monthly median sales price. Started the year at 430,000. So that's what prices are looking like here in the Phoenix area. So here's what Housing Wire is saying why home prices are continuing to increase with higher mortgage rates. And before we get there, if any of this is helpful for you, make sure you hit that subscribe button and consider sharing it with someone who might appreciate this information. Why are home prices rising with higher mortgage rates? So I already mentioned Logan Mohtashami is a really great housing analyst, and this is his article that really goes through kind of historically where home prices have been, what the crash, quote unquote, has been predicted for every year and how that actually has not come to fruition, and his expectations for what is going to happen in the market. So he kind of goes through all of the different types of reasons for these crashes to take place over the years, according to either the media or, YouTubers or whatever. So 2012 shadow inventory, 2013 higher mortgage rates, 2014 quantitative easing ending in October, 2015 manufacturing recession, 2016 home prices back to a bubble high, 2017 no good reason, 2018 5% rates, 2019 home price growth was cooling off. Then we had COVID, 2021 forbearance, 2022 7% mortgage rates, 2023 historically low housing demand, 2024 I did not see this article. Apparently you're going to have to find this one on your own. Higher mortgage rates, higher inventory, sexless men, silver tsunami, credit card debt, take your pick. So there's a lot of things in 2024 being called out here. So he says that if history is our guide, it's rare for home prices to fall in general since 1942. So he has mapped out every year and the percent change in home prices over these years since 1942. And you'll see all of these are positive, except for, of course, we have the Great Financial Crisis. And then in 1990, there was a 1% decrease in home prices, a 1% change. And so his point being that the reason home prices are going to decline is when we have a surge of inventory and distressed sellers. And he says, as you'll see below, inventory is growing, but it's been calm, a healthy rise in 2024, not a flood of houses coming onto the market. He says, we have more inventory because demand has been softer, and we have more new listings this year compared to last. If mortgage rates had trended below 5.75% to 6.25% this year, we would have been growing home sales regardless of the inventory data. Inventory is growing and home price growth is cooling down from the savagely unhealthy housing market of 2021 and early 2022, but it's not enough to crash home prices nationally. He says that using the NAR data, the normal amount of active inventory since 1982 has been between 2 and 2.5 million. In 2007, active inventory spiked to 4 million. Today, it's at 1.39 million. So that really helps give some context on where we need to be in terms of our inventory to see a growing market or a declining market. He also goes on to talk about how foreclosure levels are at historically low levels. We don't have any major forced selling because people have tons of equity in their homes. He says, in terms of new listings, 2023 and 2024 will be the lowest new listing periods ever. This data has been trending between 30,000 to 90,000 weekly for the last 5 years. And you compare that to 2009 to 2011, the data line ran at 250,000 to 400,000 per week. So that is a huge difference. He says the only time in over 80 years that national home prices have crashed was when new listings data was running 3 times higher than we've seen in the past few years. So long story short, he's saying that we had one period where national home prices crashed. And to replicate that model, you would need similar variables, mainly distressed sellers or people forced to sell into a declining marketplace. Some people believed rising mortgage rates over the last 2 years would automatically mean home prices would crash. History disagrees with this assertion. The data has shown us for decades that we have periods in history where we've had both rising mortgage rates and inventory without home prices crashing. So hopefully that helps kind of describe what's going on in this market. When you see a lot of headlines out there about increasing inventory and too many homes on the market and a crash is around the corner, just know those numbers, because where we're at in terms of our inventory is still very low compared to where we were at when we did see a huge decline in home prices. We also don't have a lot of distressed sellers out there. We have a lot of homeowners with a lot of equity in their home as well. Now, of course, there are plenty of factors in the economy that could change where the housing market goes from here. But what Logan is saying is that historically, it's not common to see the housing market be so drastically affected by changes outside of the housing market. The great financial crisis was started because of the housing market. That was our fault. And so that's why we saw such a huge effect. Anyway, despite where we are seeing mortgage rates go and everyone's thoughts and feelings on affordability, the data shows that home prices continue to increase and probably will unless we see some significant changes. Now, in terms of rates, here's where we're at. Now, it's an ugly picture. We're under 7, thank goodness, but we're at 6.9. And, back in the beginning of September, we were at 6.1. So we've increased almost a full percentage point since then, unfortunately, for buyers, because that is making things more expensive. Now, I said there is one segment of buyers that is still holding their ground, and that is that first-time home buyer. They're holding off on purchases amid slim pickings and high mortgage rates. So those are kind of the two factors that we just talked about in that article, where we still have low inventory, so slim pickings for buyers, and rates have continued to increase. So therefore, you don't have a whole lot of choices, and it's already costing you more than you probably want it to be. So you're going to be really picky. And when you don't have a lot to choose from, it's hard to actually get off the fence and make a move. So this article is talking about how it's very slim pickings for buyers. And another issue is mortgage rates have hovered over 6% for the past month, waiting for rates to drop significantly, says one first-time home buyer. I wanted to see what's out there and get a good idea. I'm willing to buy if the right thing comes my way in terms of location and price point, but it just hasn't happened. And I think there's a lot of buyers out there who are open to the idea if the right thing comes up, but they're not going to force the issue if they don't have to, just because that payment doesn't feel comfortable to them. Now let's get into talking about what's going on with the Cromford Market Index, as we do every single week. It is sitting at 91.4. This has been going down week after week, and we are certainly on the edge of a buyer's market according to the CMI at 91.4. Anything between 90 to 110 is a balanced market, but under 90 is a buyer's market. Demand 76.7. This really hasn't moved all that much, but it's that supply number that has continued to go up. So that's at 83.9. Now, if we look at every city, you'll see a bunch of red arrows once again. The average change with all of these major cities month over month is negative 4.5%. Last week, it was negative 4%. So we are seeing an acceleration away from that seller's market with all of these major cities. We're seeing a big change with Paradise Valley. They decreased by 30% and now sitting in a balanced market when they were in a seller's market as of last month. And then we've got a few cities still in a seller's market, technically, Avondale up to Fountain Hills. We've got our balanced market sitting at Cave Creek all the way down to Peoria. And then our buyer's market Surprise to Buckeye. So this is to be expected as we're seeing the overall CMI go down. We're seeing some of these major cities go down as well. Even those that are, still had an increase in the direction favorable for sellers, like Peoria, Tempe, Cave Creek, and Phoenix, all of those saw pretty minimal positive changes, like 0% change for Phoenix, 7% for Cave Creek. Tempe was 8% and Peoria 2%. So they're not gaining a whole lot of strength, even the ones that have moved more towards a seller's market. Now, if we look at the contract ratio heat map, you'll notice that there are a few zip codes that are warm, nothing in the red as of right now, but a few places in South Phoenix and into the West Valley where we are seeing more of a hotter market, meaning that they have more listings. The ratio of listings under contract compared to those active listings is higher than some of these other cities. We do have a number of zip codes here that are seeing a colder market, such as 85021 in Phoenix. The contract ratio for this is only 17. There's 88 active listings and only 15 are under contract. So it's almost kind of cooling off in Scottsdale and like the Phoenix area and some of the East Valley. And then it looks like it's heating up a little bit in the West Valley. So we'll continue to track this as we always do. Last week, our team spoke with about 5 different buyers, just discussing the market and their plans to buy a home. So if you're in that situation and you're just not really sure, we do have a link for a discovery call where you can set up a time to chat with us and just learn more about the home buying process and whether or not now might be the right time for you. And if you're thinking the same thing, but you're on the other side of things, like a home seller, I have a link for an instant home value and a discovery call link as well if you just want to chat about the situation in the market and whether or not now is a good time to sell, especially as we're getting into the holidays. So feel free to check that out. I'll see you guys next week on my next market update.